Happy New Year, guys. Welcome back to my YouTube channel. It's been a while to drop any video here. So, today I'm going to be talking about 5 things I think you should do in the year 2026. Now, this is from my own point of view and what has helped me, right? So, after that, we are going to be analyzing some here that I'm looking at. Then we call it a day. So, the very first thing you need to do in the year 2026 is to get a prop account. A prop account. Why? It's because, first of all, Forex is a capital intensive career or business. It requires a lot of money for you to make a lot of money. You get, and the average person might not have $1,000 to waste or even $500 or uh, you know, stuff like that. Especially if you're from Nigeria. So prop gives you the leverage to be able to uh leverage on the, you know, bigger capital to access huge funds. You feel me? So that's what prop does. So with as low as $20, some people sell accounts for as low as $17, $15. I think some props like that. So what you do is that you get an account, maybe as low as we have an account as low as 5K, to pass. Then you'll be funded, you have access to higher higher capital. You feel me? So instead of depositing that your $100, you can cut it in half, you know, use $50 to get a prop account, then you can deposit the remaining $50 on your personal account. You feel me? So I feel you should. Now, this is my point of view. If you have, money lying around, maybe 1,000 or $500 that you're not using again, then even with that, you can still get a prop account. There's nothing bad in it. It is a good thing to get a prop account. It gives you what high leverage. There are accounts that are like 100K dollars, 200K, 300K. You can be funded as much as that, even to $1 million. You feel me? So, and after that, you don't put your egg in one basket. Just buy profit. Make sure you deposit some little amount in your personal account too. But in a nutshell, get a prop account. It gives you access to bigger funds. You get me? So the second thing is to what? Manage your risk. Forex is a skill that requires you to manage your risk every single time. Now, risk varies. So in the short term, in a simple definition, risk means that um okay, let me define it this way. Risk means uh being comfortable with losing a particular amount of money. So for me, I might be comfortable losing $100. I might be comfortable losing $200. I might be comfortable losing $1,000. I might be comfortable losing even $10,000. So to me, that is risk. So any amount you are comfortable losing, that is your risk level. That's your risk, what's it called, tolerance. You get me? So you must apply risk management. You get? So that is it. So necessarily don't have to be okay, risk 1% on your account, risk 10% on your account, risk 50% on your account. The amount you are comfortable losing, that is the amount of risk management you should apply. That is your risk tolerance. That's where you should, draw the line. You feel me? So there's no forex is a zero sum game. So you are as you're making money, another person is losing. So there are times that you have to lose too. You can't always be winning. It's impossible. So you can do the right thing today. You can do a particular, okay, let's say you see a particular setup today. You take it, you make a lot of money. You might repeat the same thing tomorrow and you lose money. I don't I don't like the idea of calling myself a forex trader or a trader. I see us as risk managers. That's what we do. That's basically what we do. We manage money. So if you miss the best, what manager wins. You feel me? So that is the second thing you have to do. Risk appropriately. Risk what you can afford to lose. You feel me? So that's it. Then the third thing is don't trade with your last cash. This is very, very important. Make sure you don't trade with your last cash because risk is going to be out of the room once you trade with your last cash. So let's say you're comfortable losing 1% of your account. Immediately it is your last cash, emotion set in, which means you are not thinking logically anymore. You are not what? Thinking logically anymore. So you need to, have a buffer. You know, either you get a job or a side also. Make sure you are not in that position that you're trading with your last cash. You know, there are people that traded with their last cash and they they did it, they always got through, but exception doesn't make the rule. So, try as much as possible to, have buffer. So if you have $1,000, maybe use $200, $500 to, make sure you have something to eat, something that can, that can attend to your immediate needs, not that you'll be, waiting on Forex to, to sort out your bills and or all that. Make sure you don't trade with. So, cause once you trade with your last cash, even even the slightest what's it called, drawdown, you're already panicking, you're checking your phone every seconds and all that. Please don't do that in the year 2026. Then the fourth one is stick to the higher time frame. Now, like I said before I started, I said this is my own point of view. What works for me. So stick to the what higher time frame. I trade the lower time frame too, or let's say I used to, but I really don't enjoy it the way I enjoy trading on the higher time frame. There's a kind of what we call peace of mind that comes with trading on the higher time frame. You understand the whole story. You understand every single thing that is going to happen in the long run. You are not scared to take trade. You're okay with it. You feel me? So I don't go lower than 4 hour, 4 hour daily, weekly, monthly. Because I'm a swing trader, so those are the places I take my trade from. So try as much as possible to, go to 5 minute and well, some people, take trade from there and they are profitable. But just for my own point of view, make sure you stick to the right time frame. And the last thing is gonna be always withdraw your profit. Always what? Withdraw your profit. Then you diversify. Don't put all your eggs in one basket. Once you make profit, make sure you withdraw them. Especially when it comes to prop trading. Prop firms. I've been trading for a couple of years now. So I was involved in the crash MFF. I remember MFF took my account that period. So there's nothing promised. And in prop trading, especially when it comes to your personal account, your broker, if you trade with with good broker, you know, at least you still have opportunity though, okay. But for prop trading, they can decide to pack up tomorrow. Anything can happen. So make sure you always withdraw your profits from your prop account. Even on your personal account, you can withdraw your money, put it into real life things. If you want to, okay, let's say you want to compound for a long period of time, okay, set a particular account that, okay, this is for compounding, this is for my daily expenses. It helps. So you don't, just keep giving back to the market, giving back to the market. Once you make profit, withdraw it. Put it somewhere you want to compound, you can compound outside of your trading account. You get. So those are the, five things I think you should do in the year 2026 is going to help you in the year 2026. So thank you guys for listening. Then I want to analyze some peers I'm looking at. So first of all, I want to look at GBP card. So I mean this trade, I think I probably analyzed. I've sent it to my group. So I enter from here. My target is above this eye here. So above this eye here, then we have this below. So I enter from this area. So simple. My strategy is very, very simple. So I think it's going to be in the next video. I'm going to talk about something in the next video. So before I can place a trade, I have to know where my TP is. And I have a reason why I feel price is going to get to that level. You get. So I need to know my TP before I even enter any trade. So if I don't have a TP level, I don't enter any trade. I don't just enter my trade because I saw my setup and I need to have a TP level. Okay, is price going to get to this level? Why is it going to get to this level? So I ask myself these questions before I decide to place my trade. You get. So currently we are running at this. So now price is currently, moving. So I'm targeting this area. If price is supposed to retrace, I'm targeting this area for retracement level. But we need a what's it called? We need liquidity first before I can decide to, take the trade from there. So something like this, something like this. Oh, why did I take that one? So like this, then no liquidity, no entry. So possibly, if it's possible, if price comes in from there, fine. If it doesn't, you know, I'm in already. But I'm looking at that, you know, that POV. So that's it. So my target level is above this, this I right here. You get. So that's my target level. Then Euro JPY. Euro JPY is the next pair I'm looking at. Euro JPY. Yeah. So market has still dancing around this area. So see liquidity, this is my liquidity, then this is my entry, this is my POI. So market is still dancing around this area. So I have to use all of this because of this guy here. Because of this guy here. So, I've been at this particular stuff, so I'm going to, explain it another time, not today. So this is the POI. This is supposed to be the POI. But because of this guy, this last candle here that came with this, I can't just, you know, use this alone. Assuming they didn't meet each other, this red candle and this red candle, they didn't touch each other, then I would have used this alone. But now I have to put my, so it's like 1 to 3 hour. So that is, if price can retrace a little bit, you can get your entry through at this point. So to, you know, to go above this guy, then I think EU. Well, I have a very long POI. I don't remember I'm issuing trade. I have a very long POI. It's not on this. Can't find it here. Let me check on Euro. Check why. I don't know. See, I don't know why this broker are showing different thing. Just imagine this. The same, the same thing on the daily, yeah, but different price price action. Well, it's the same thing here. No, it's the same entry here. You get, liquidity, push to the upside, liquidity, price come back and take it out. Then we are moving. So the reason why I put it above here is because of this. So market has been ranging. Remember, I'm a swing trader. So this is the monthly time frame. So we've been we've been in the downside. Sorry, from here, you know, I so needs this I to be taken out. I know I so change direction at this point. So immediately price take out this I, you have another retracement. You feel me? You have another retracement. So that's why I'm taking it to this, to this I. Yeah, that's why. Then Euro USD. Euro USD has been a backward. I won't lie to you. I've been Euro USD since last year, and we are still struggling to get to our TP. Currently now, price is price is retracing. So this is my TP level for this guy here. This is my TP level. We are yet to see price currently retracing backward, but no threat. So I'm still chilling, waiting that okay. So I got my first entry here, here, then got another entry. Now I have another entry here. So this is my target. This is it. Target is so obvious. This is my target right here to this place. We have imbalance for these guys to fill. We have weekly OB that needs to be filled. On the monthly, we have OB that needs to be filled as well. We have OB that needs to be filled. So we have this OB that needs to be filled. This already stands as our liquidity. So if you want to start selling from here, you have the right to start selling from there. You get, but I won't sell from there yet. I'll have to wait for what price is going to do at that stage. Feel me? Yeah, so because price can continue buying. We don't know. So that is that. So I don't know what price is doing here, but I'm still holding. I'm still holding. So that's it. I'm not scared of, entering new entries or taking new because I'm managing my risk. I'm what manage my risk. Once you're able to manage your risk, so you can still enter if you want to enter, just just make sure you manage your risk. We had the push to the upside. It's the same thing we had on the what PM was that? I think it was Euro JPY because I took one trade last year and that was my last trade. You know, we pushed to the upside. liquidity created, price took it out, then came back for it. Then, that is what I'm expecting. So, you know, always make sure you use risk management. You stick to risk management. So I'm already risking what I can. So I have one, two. I already closed this. So one, two. So these are just my two entries I have on EU. So I'm expecting it to move to the upside. So that's what I'm expecting. So I think that will be all for today. So make sure you get the proper count, you manage your risk, you don't use your last fund to trade, you want to stick to a right time frame, and you make sure you withdraw your profit and what? Diversify. So have a great day. Peace out.